Hi there, I'm Renos Vakis, lead economist at the World Bank, and your host for Accelerating Development Ideas for Impact. This is not your typical podcast. It's an AI powered conversation brought to you by the World Bank Institute for Economic Development, where we unpack the latest research with one goal in mind, turning big ideas into real world impact. Let's get started.
Thank you for the introduction, Renos. Welcome to our show, where we'll be discussing the sobering findings from the latest Global Economic Prospects report.
Yes, it's a truly critical time. And this report, it really highlights some serious global economic headwinds for policymakers to consider.
Indeed, today we're going to explore the worsening global economic landscape and also delve into the deepening vulnerabilities in low income countries and fragile situations.
So, delving right in, what's the overall picture looking like for global growth, really, in the coming years?
Well, it's quite stark, to be honest. Global growth, it's projected to weaken to just 2.3% in 2025.
Wow, 2.3%. What does that mean in a historical context? Is that particularly low?
Yes, absolutely. That figure marks the slowest rate of global growth we've seen since 2008 when you exclude outright global recessions. So it's a significant slowdown.
And looking a bit further ahead into the next few years, say to 2027, does the outlook improve much?
Unfortunately, no, not significantly. By 2027, global gross domestic product or GDP growth is expected to average only 2.5% throughout this entire decade, the 2020s.
The slowest pace, you mean, of any decade since the 1960s? That's quite a historical low, isn't it?
Precisely, it's a very concerning trend. And what's more, this particular downgrade to global growth this year, it's principally driven by advanced economies.
So, what are the specific factors then contributing to this global slowdown, especially, given the impact on advanced economies that you just mentioned?
Well, a big part of it has been the sheer unpredictability. We've seen actually global trade policy uncertainty measures reach historical highs over the past few months, truly unprecedented levels of unpredictability.
And um, how has that uncertainty, I guess, manifested itself in real terms, particularly in financial markets?
We saw a sharp spike in financial market volatility. This happened in early April, directly due to escalating trade tensions, which in turn caused global equity markets to plunge.
That sounds pretty turbulent. Did things stabilize at all after that initial shock?
Yes, thankfully, asset prices largely recovered, after an initial 90-day tariff pause was announced and following a US-China tariff rollback that happened in May.
And what about for emerging market and developing economies, or EMDEs? Did they experience similar effects?
They did initially. EMDE sovereign spreads also rose in April, particularly among economies facing higher prospective trade barriers. But just like the broader market, these spreads generally retreated as trade tensions partially de escalated.
That's that's good to hear that some stability returned. But shifting gears slightly, how is this overall global slowdown impacting investment? Is it concentrated in specific areas?
Yes, it really is. The global slowdown is, in fact, heavily concentrated on investment, including foreign direct investment or FDI, and also portfolio flows.
And why is that particular concentration on investment um, important?
Well, these flows, they tend to respond quite directly to shifts in demand. So they're often a leading indicator. What's concerning is that FDI inflows into EMDEs have fallen to less than half of their peak level from back in 2008.
That's a significant drop. And is that expected to continue?
Unfortunately, yes, they are likely to remain quite subdued, which, has broader implications for development.
And in terms of specific regions, how is this slowdown affecting them? Are certain areas feeling the pinch more than others?
Yes, definitely. Growth is projected to slow in East Asia and Pacific, or EAP, and also in Europe and Central Asia, or ECA, in 2025.
And why those particular regions then?
Both EAP and ECA are they are highly reliant on global trade, so they are more exposed when global trade faces headwinds, like we've been discussing.
Mm. So, given those vulnerabilities in regions like EAP and ECA, what does this actually mean for policy? What needs to be done, at a broader level?
That's a very, very good question. What it means is that multilateral policy efforts are really, really crucial. We need to foster a more predictable and transparent environment for resolving these ongoing trade tensions.
So, global cooperation is absolutely key then. But what about specific actions for EMDEs themselves? What should they be looking at?
For EMDs, it's absolutely essential that they consider lowering tariffs with respect to all trading partners. It's also crucial they play a vital role in restoring a fully functional rules based trade system, specifically through the World Trade Organization, or WTO.
So we've talked about the broader economic landscape and trade policy. I'm wondering, how does this actually translate for the outlook for low-income countries, or LICs specifically? What's the picture there?
When we look at LIC's, growth is projected to rise to 5.3% in 2025 and average 6.1% in 2026-27.
That sounds like a pickup, right? But is it enough, I guess?
That's the key. This 2025 forecast is a significant downgrade, a zero point 0.4 percentage point reduction compared to earlier January forecasts.
And what does that mean then for poverty reduction efforts?
This pace, regrettably, is insufficient. It won't fully unwind the income losses from the pandemic, nor will it spur the rapid job growth needed to lift millions out of extreme poverty.
So when we talk about millions still in extreme poverty, are we seeing specific areas or types of countries being hit hardest by this?
Absolutely. We're seeing this challenge particularly amplified in what we call fragile and conflict affected situations, or FCS.
These FCSs are home to nearly 1.1 billion people in 2025, and they account for almost half of the global population that's living in extreme poverty. Half of the global extreme poverty concentrated there? That's a really stark figure. What's driving that?
Well, the incidence of armed conflicts has risen substantially in recent years. This has led to the destruction of both physical and human capital.
And the impact of that destruction?
It directly causes sharp increases in poverty and food insecurity. It often culminates in deep recessions, too.
And geographically, are there specific areas where this is, particularly pronounced?
Yes, persistently challenging economic and humanitarian situations have been created by pervasive violence and political instability, especially particularly in the Sahel region and its adjacent countries. So these regions are facing conflict and widespread poverty. Does the report also delve into their financial stability or perhaps fiscal health?
It certainly does. Low income countries, or LICs, are facing really extraordinary financial pressures right now.
Extraordinary in what sense exactly? What are the key elements contributing to that pressure?
Well, it's a combination of elevated public debt, significant fiscal constraints, and some real obstacles in mobilizing private finance.
That sounds like a very precarious situation. Are these issues widespread among LICs?
They are. More than half of all low income countries are currently either in debt distress or at high risk of it.
Half, you said. How does that compare to previous years?
It's quite a significant increase. That figure is actually double the share recorded back in 2015.
And What's driving these high debt levels and constraints? Is there a particular cause that stands out?
Yes, a notable factor is that interest costs alone account for about a third of the deficits in these LICs. It's a substantial burden.
Beyond these mounting debt burdens and interest costs, are there other external factors that are worsening the situation for low income countries?
Absolutely. In fact, official development assistance or ODA inflows have actually fallen.
And how significant is that decline, and what are its implications?
It's significant enough to exacerbate fiscal challenges and humanitarian issues, especially for those FCS we discussed.
So a reduction in aid is adding to the existing pressures.
Precisely. And the overall outlook for LICs is really clouded by a worsening external environment.
What do you mean by that? A worsening external environment?
Well, we're seeing rising trade tensions, tighter global financing conditions, and lower commodity prices, all of which are weighing heavily on their prospects.
And what about natural disasters? Are those also a factor here?
Yes, unfortunately, natural disasters, particularly climate related events, pose significant downside risks.
And these climate events, how do they manifest their impact?
They tend to amplify existing challenges, especially food insecurity and population displacement, making an already tough situation even tougher.
So, with all these intertwined crises, what are the key policy responses needed for these vulnerable nations?
Global cooperation is absolutely essential. We need to scale up support for vulnerable countries as they grapple with conflict, debt burdens, and climate change.
And what about domestic policy action? What needs to be prioritized there?
Domestically, policy action is critical to strengthen fiscal resilience. This means improved revenue mobilization and, importantly, reprioritized spending.
So, generating more revenue and spending it better?
Precisely. EMDEs in particular need to raise additional domestic revenues and channel spending towards growth enhancing measures and vulnerable populations.
Curious, beyond fiscal measures, are there broader structural reforms needed?
Yes, structural reforms are also essential for strengthening institutional quality, attracting private investment, and, improving human capital and labor markets.
And for those FCS, what's unique about their policy needs?
For FCS, tailored domestic policy reforms backed by well coordinated multilateral support are critical. They face unique, daunting development challenges.
Thank you for joining us. You can find the full report on our website. Just follow the link in the description. Be sure to subscribe to be the first to know about upcoming episodes. And before you go, how do you plan to put what you learn into practice? And what topics you'd like us to explore next? We'd love to know. Until then, goodbye.